5 key tips to take you from beginner to pro with crypto trading. Risk-weighted position sizing using the Kelly criterion. Pro tip: don't just blindly use a fixed percentage of your capital for each trade. Instead, implement the Kelly criterion to calculate the optimal amount of capital to risk on each trade based on your edge and win rate. This is a more dynamic and adaptive method that maximizes your growth over time while minimizing risk. Why it's pro. By using the Kelly criterion, you're not gambling on random trades, but making mathematically sound decisions based on your probability of success. This ensures you're properly capitalized for high probability setups and can compound your gains effectively. Advanced order flow and liquidity analysis. Pro tip: learn to read order book depth and liquidity pools. Use market depth analysis to spot large buy-or-sell walls and anticipate price movements based on the liquidity imbalances. Pro traders track how much liquidity is available at key levels to time entries and exits with precision, avoiding getting stuck in illiquid conditions. Why it's pro. Understanding the nuances of order flow gives you a serious edge. Spotting where the big players, institutions, whales are placing their orders can help you predict sudden price moves and avoid getting caught in false breakouts. Market microstructure analysis and ticking algorithms. Pro tip: pro traders often have access to market microstructure tools and tick data that allow them to understand the finer details of price movements, such as order execution speed, slippage, and trade volume at specific price points. Some use algorithms that track price movements on sub-second timeframes to find inefficiencies in the market. Why it's pro. By understanding how orders are executed and how different exchanges handle liquidity, pro traders can exploit tiny inefficiencies for arbitrage opportunities or get ahead of price movements before the market reacts. Decentralized finance, DeFi, yield optimization, and arbitrage. Pro tip: the advanced pro trader doesn't just trade on exchanges, they utilize DeFi platforms, staking pools, and yield farming strategies to make passive income on their holdings. They know how to leverage platforms like Uniswap, Aave, or Yearn Finance for high-yield strategies and arbitrage opportunities, which involve exploiting price differences across DeFi protocols or centralized exchanges. Why it's pro. DeFi presents a completely different opportunity set compared to traditional centralized exchanges. Being able to extract value from yield farming, liquidity provision, and even governance tokens gives pros the ability to compound returns in ways most traders overlook. Quantitative trading with machine learning and AI. Pro tip: many pro traders are incorporating AI and machine learning into their strategies. This could range from neural networks that predict price trends based on historical data to reinforcement learning algorithms that adapt to market conditions in real time. Some use advanced statistical models, EEG, ARIMA, GARCH, to forecast price volatility and movement. Why it's pro. These tools allow for highly adaptive trading strategies that can learn and evolve with market conditions. By combining your own market experience with AI-driven insights, you're able to refine your entries, exits, and risk management to levels most human traders can't match. For more information, follow the link in the description.